All right, everybody, what's up? I am absolutely doing great. Just got back from vacation. It was awesome. And I've had some of the best trading of 2018 while I was on vacation. I want to break down each one of the trades that I took, why I took them, what made them so good. And then I'm going to also talk about pretty much just some of the things that make trading good trading and why a lot of times people tend to have better trading when they're relaxed or on vacation, things of that nature. These are going to be separate videos, all uploaded this week. So the first one that I want to go over is CLNS. This was an excellent trade. Super simple. As always, we like to keep it simple as fuck here. We don't like to make it ridiculous. There's no need to make it ridiculous. Keep your strategy simple. Keep your risk management on point. That's really what I kind of teach here, and that's really what I think about. And of course, I keep these pretty basic just because I know a lot of you are new traders. So I want to keep the subject simple. I want to keep the lingo simple. And for all of you that don't know, I actually have a free 7-day crash course. That one is more structured. You can find that at financeandchocolate.com. That is a more structured course. It is absolutely free. There's 4 hours of content in there, and that actually takes you through in a structured format with a little bit more in-depth lingo and things of that nature. But I like to keep these simple because, like I said, I know a lot of you are new to trading, and you guys just really need the basics. So, CLNS. We have a heavy downtrender. Pretty much the last month and a half, I've taken about 90% short trades, which is pretty interesting. Usually I do have a short bias. I take about 65% of my trades are short trades, usually on average. But over the last couple of months, they've really been short-sided trades. And what I mean by short trades is where we make money when the stock moves down. I know a lot of you don't even know that. You can actually make money when the stock goes down. So that's something that you guys need to definitely have in your arsenal of trading is short selling and the ability to short sell. Don't let people scare you. If you use proper risk management, it's not scary or some evil thing that's going to blow up your account. You just have to, like anything, you have to have risk management. You have to understand that risk is a very real part of trading and you have to own that risk. So, what we have here is we have CLNS and we have a couple of levels that are identified here on the chart. As you guys know, I pretty much only trade on price action. I hate all the other bullshit, and I've learned over the years of trading, the more shit that I have on my charts, the worse trader I am. The less stuff that I have on the charts, the better trader I become. That's just how it is. So, right here, this is the main level that I want you guys to see. Unfortunately, I missed this level, and this happened. This was like last month. We had this break here, and this is really where we just got that dive down. And we had earnings. I don't really like to trade through earnings, so even though this was in our favor, this could have also been positive and this could have gone higher. But based on the price action of the chart, this is pretty much, we can understand this stock sucks. It's for some reason it's not doing well. All right. That's all I need to know to be able to short. At that point, I started looking for certain specific setups, specific patterns that allow me to short. But I've been wanting to short this since pretty much right here. This little level identified, I told my traders in the chat room, let's short it. But I personally missed the trade. I didn't catch this move down, which would have been beautiful. But what I did manage to catch is this move down here. So what we had is we had a stock that was testing pretty much the $6 level. Right here, this $6 level, as we talk about a lot on here, is whole number support and resistance. I'm a big fan of whole number support and resistance. This was a little bit higher at like 615, but really this was because of the $6 level. We had a huge gap down, and we kept testing this level, and we just kept getting hit, and it kept coming down. So this is a level that we want to pretty much recognize, and we want to trade. So what we did is, and what I did is, once we got a nice solid break, we also had this uptrender here. If we go down to a, not an uptrender, but a trend line, if we go up here to a shorter time frame, ignore these little lines. I'll actually take them off. That's post and pre-market data. But what we have is we have a stock that keeps hitting this $6 level, and we keep getting higher lows, higher lows, higher lows. Usually this means that eventually this is going to break to the upside because sellers are losing strength. But in this case, we have a downtrender, all right? We have a stock that's downtrending. Not only that, we have a level that's a whole number support and resistance level, and basically we have a level that's very difficult and just won't break. So usually when we have a flat top triangle, which is pretty much what this is, it's usually a bias to the upside. But since we are so far away when it comes to a gap, We are so far away when it comes to a gap. Whoops, let me come back here and let me fix my charts. We are so far away when it comes to a gap that this is usually going to continue lower. Not only that, we have a stock that is just tremendously downtrending. I'm going to clear this up a little bit just to give you guys a little bit more clearance of what the hell is going on here. All right, so this is a trade that I took. I entered literally right here at the break of $6, under $6, and this was just a beautiful 50-cent mover. That's 10% profit on this trade. I traded it for a 1 to 3 risk reward. You guys know that I love 1 to 3 risk reward because that allows me to be accurate only 25% of the time and break even. Anything above 25% and I make money over the long term, period. Game over. That's just how it is. So I like trading 1 to 3 risk rewards. Super simple setup. We're coming here. We're gonna start running into, I guess, support. Just we're kind of at the bottom here of this initial. Pretty much what this is almost like the day trading strategy that I use, where it's a gap down, and then we trade the, what do you call it? We trade the range that the first candlestick puts in. That's kind of a day trading strategy, but that's for a different. That's for the trading mastery course. But pretty much, what we're gonna see is if we can come down here and we can break this range, we may continue much lower, and this is another potential entry down here. But the trade's already a good trade. I've already made money on this trade, and just to give you some perspective, on 1,000 shares, that would have been $500 in like 1, 2, 3, 4, 5 days. The trade would have cost you about maybe $6 grand. If you're trading with a larger account like I am, let's say you took a 2,000, 3,000, 4,000 share position. This is easily $2,000 or $3,000 in a week, and that's the beauty of trading. As your account grows, the ability to make money grows, and you don't need to have a huge account to make money. I mean, there are trades. There are these tiny little trades. Look at TNK. TNK is like $1 stock that we traded, and you can make $500, $600 on that with $1,000, $2,000 position. So you don't need a lot of money in order to make successful trades. But what's nice to know, and it kind of should be a goal, is that as you build your account, you can also, on top of that, take bigger profits. So that should be a goal for everybody, is to build their account so they can take larger positions. Not only that, I focus primarily on swing trading. Now, I clear the pattern day trader rule just fine, but I know a lot of you guys don't, and unfortunately, there's a lot of hype around day trading, but sometimes swing trading, especially with a smaller account, might be the better way to go, especially if you throw into options and things of that nature. It just might be the better way to go. Now, when it comes to that, I'm not saying that you can't make money day trading. I day trade, I teach day trading, I like day trading. A lot of my students day trade, but this trade in specific is taking place on the day chart, which means that each one of these candlesticks is a day. So this is 1, 2, 3, 4, 5, like 6, 7 days, okay? So understand that there's a difference between swing trading and day trading. Neither one is better or worse. I just personally like swing trading better. I feel like my predictability ability, I guess we made a new phrase. My predictability ability seems to be better when it comes to swing trading. The beauty about trading in general is it's just risk versus reward. It's just statistics. It's just knowing your ratios. And you can make money with a 10% accurate strategy. You can make money with an 80% accurate strategy. You can lose money with a 10% accurate strategy. And you can lose money with an 80% accurate strategy. Too many people focus on accuracy and on predictability and on how often you're right. And really, none of that fucking matters by themselves. And I talk about this all the time. That doesn't fucking matter. Your accuracy doesn't fucking matter. And there's so much shit out there, and it just drives me nuts. But everybody thinks that accuracy matters. It doesn't fucking matter. Accuracy does not matter by itself. It matters when you combine it with other ratios, but you need to do the actual math behind it. It's not crazy math, but you need to do the math behind it to actually, for accuracy to mean anything. So just remember that. I go on tangents. I hope you guys don't mind. But so this is CLNS. I'm going to talk about AQMS. I'm going to talk about, what else do you trade? AQMS. Oh, GE. We absolutely crushed GE. I'll be talking about those two. I traded that while on vacation. Excellent trades. Both of them 1 to 3 risk reward winners. So just really, really good trading. And the reason is because I was relaxed. I was having a good time. And pretty much the less you pay attention to your trades, once you're in a position, the better. You just got to let them do what they're going to do. Make sure that you have your risk management in check, and you just let the trade play out. But you'll notice that the more that once you're in a position, there's not much you can do. You're in a position, you're just in the position. Make sure that you have your stops where they need to be. Make sure you have your take profits where they need to be. And you just let the trade play out. But the more that you analyze, the more that you look at the charts, you might exit too early. You might move your stops, things of that nature, which we talk about are big no-nos in trading. There's more chances of you doing that if you are constantly monitoring your trades. Now, if you're a day trader, that's a different story. I still think you should have your stop losses in place, your take profits in place, but it's a little bit different. But with swing trading, once you're in the trade, fuck off. Go have fun. Don't be looking at your charts constantly. So that's kind of my 2 cents here. But hopefully this was informative. A super simple trade. For those of you who are listening to this and saying, well, Derek, what the fuck did you do? You didn't really tell me what you did. Okay, so let's break this down very simply. It's a downtrender, okay? Which means that I'm not going to go against years of data that says that this is a shitty stock. I'm not going to go against that, all right? Yes, you have times when it trended upward, okay? But for the most part, this is a piece of shit. It's plain simple. That's just the honest truth. I'm not going to sugarcoat it. It's just a piece of shit. So I'm not going to contradict that. Not only that, we got shitty earnings, negative 7,000%. That's just bullshit. That's shitty earnings, okay? So, which is the reason why we got this huge drop. And then on top of that, we put in a level, $6. We put in a triangle pattern, and we broke it. It's not rocket science. You just take the trade, you put your stops where they need to be. In my case, they were above 615, and you just take the trade for a winner. So I risked about like 15, 16 cents for my risk, and my reward was 45, 50 cents. Okay, 1 to 3, risk to reward, easy trade, donezo. Very simple. Very, very simple, you guys. Super easy trade, super simple trade. Don't overcomplicate it. Just fucking take the trades and just trust your strategy, trust yourself. Of course, that's easier if you have the proper education, you know what you're doing, all that kind of stuff. That's why I say I have a free 7-day crash course. You can find that at financeandchocolate.com. There's like 4 hours of content in there. And then, of course, I have mentorships and stuff of that nature. But don't overcomplicate your shit. Trading doesn't have to be complicated. It's easy. It's not easy. Let me rephrase that. It's easy once you understand what you're doing, and once you can control your emotions, once you can be disciplined to just take the damn trades and ignore the bullshit that happens pretty much every day in the market. You know, too many people watch Bloomberg and CNBC and Fox News and CNN and all these. They have fucking news everywhere. They have screens everywhere. They have Fed data coming out. They have just simplify your strategy. Trust me. Simplify your strategy. You will do better. I've learned that over the last 7 years. Simplify your strategy. You will do better. All right, you guys. Hopefully that was helpful. I will see you in the next video. Like I said, I still got a couple more that I want to film. We got GE, General Electric, and then we have AQMS, which were both awesome trades. Those will be coming right up. All right, you guys. See you in the next video.